Welcome back, everyone. I hope you managed to grab a quick drink in the break. Just a quick reminder on some of the housekeeping items and some suggestions for the day. We recommend you make use of the networking areas on the Totem platform, such as the coffee tables. Please do make time to visit the presenting partner showcases and talk to the sponsors. And last thing is please do submit the questions through the Totem platform. Obviously, the last session we had a lot of great questions, so please do fire away. I will bring those questions up at the end. So this session is going to run for 50 minutes, 40 minutes of presentation, and then we'll do 10 minutes of Q&A at the end. So I'd like to introduce you to Rick Verma from Avalara and Ben Sestig from Katawiki. Rick leads Avalara's marketplace business team in EMEA. He's responsible for supporting global marketplaces with tax automation solutions and compliance requirements to solve tax pain points and barriers for marketplaces and marketplace merchants. We know there's been a huge amount of questions over this over the last 3 or 4 months, so I think there's going to be some great questions and great content for each of you. And Ben Sestig is a product manager with Katawiki, and his goal is to provide solutions to compliance requirements and delightful user experiences to sellers. So I will now turn it over to Rick and Ben.
Hi everyone, hope you're enjoying this excellent Tamebay live event. Before I start, can anyone guess how much of global e-commerce is facilitated by marketplaces? So that's what percentage or fraction of all e-com globally belongs to marketplaces. You can put it in the chat or the Q&A function. I promise we'll reveal the answers soon. My name is Rick Verma, and I'm responsible for Avalara's marketplace business in EMEA. I've been in the tax and technology space for nearly 10 years. It's exactly what I dreamt of, when I was growing up. Not really. Our presentation today is on VAT and sales tax obligations, specifically for online marketplaces and stores. And I'm delighted to be joined by Ben Sestig of Katawiki. Hi, Ben.
Hi, Rick. Thanks for that. I think I can relate to your comment just now, but I do like to add something there about growing into tax. It's not what we've dreamt about, I guess. But let me take a step back and introduce myself first. So I'm product manager for finance within Katawiki. I've been within Katawiki for a year now. And as a responsible person for the product finance, I have grown custom and started liking taxes actually. And I think it's going to become apparent from my presentation that although there are rules, sometimes feels like rules forced upon you. If you look at it from a different perspective, it might make it nicer to work around with and actually provide delightful experiences for the users. That's at least the point of view that I'm trying to look at it.
Yeah, it makes sense, and that's the only way we can look at it, right? So to be positive, and yeah, thank you very much for joining me today as well to do this. It's really appreciated. What I think in terms of our plan today, I'll run through some of the tax legislative pieces, and then we're going to dive into some really interesting and live example of how Katawiki are approaching some of the changes.
Let's do that.
Awesome. Well, again, before diving into that, if you look at some of the drivers, what's really driving the changes that are happening, you should look at what's an incredibly interesting, and challenging the last sort of year to 15 months or so have been for us, all at a human level, to our freedoms, the impact on our normal behavior, the huge threat to our health, has changed the way we do things. And just in case COVID wasn't enough, the tax gods have certainly kept us all very busy in the last year as well. My focus, as I mentioned earlier, is predominantly on the e-commerce and marketplace space. So I've had an interesting and unique lens, speaking with many of my clients and partners on the effects of the pandemic, and particularly some of the sort of B2C brick and mortar retail businesses that have adjusted to and reacted as they moved from, what became ghost town high streets effectively to operating on online stores and becoming online merchants. In 2020, we spent 21.21 trillion US dollars shopping across all retails. Now, that's your normal high streets, your shopping malls, etc. That's a measly 1% growth rate year on year. That's not a lot. But hey, in some ways, at least it grew and didn't contract, given that we were in and still are in a global pandemic. Off that circa $21 trillion, we spent an incredible $4.29 trillion shopping online. That's huge. I certainly know, my Ring doorbell goes off all the time, so we know what that's, what that's like. That percentage increase is 24.1% year on year from 19 to 20. And it also means that just over 20% of all sales, all retail globally was online. Comparatively, the growth rate in e-commerce from 2018 to 2019, in case you're interested, was 17%. And over the last 5 years, it's been pretty. The trend's been pretty strong growth. Mostly sort of pre-COVID, it's been driven by a combination of businesses like Katawiki becoming excellent in selling online, and then consumers, of course, getting more used to buying online, including luxury items. Now, if we take a step back again and not focus on the pandemic, because that skews stats somewhat, and if you look at 2019 as our sort of normal trend, non-COVID trend, it's pretty interesting. 2020, of course, North America and European countries will have a higher growth rate because of the change in habits we've had to adapt to. But if you look back at 2019, the US only grew by 14%, Western Europe by just over 10%, versus other territories online like Latin and Asia, PAC, that were in the mid-20s, so significantly higher growth rates. Naturally, cross-border tax implications arise as businesses look to capitalize on emerging new markets. Unfortunately, that does keep Ben and I busy. Ben, are you surprised by any of this?
Not really. I think, well, we're seeing similar shifts on our platform caused by the pandemic also, where a huge shift from offline to online has been happening and occurring. I see you see that in these numbers, and I think it might be even more the case on Katawiki, where there have been no physical auctions whatsoever. So we see that traffic move to our platform.
Yeah, no, very interesting, and I think this is even more interesting now. And this is what really took, my research when I was researching. This really took me aback a little bit. And if you look at all e-commerce, and it's the answer to that question we asked right at the beginning, if you can guess, 2/3 of all e-commerce comes from global marketplaces, meaning 2.67 trillion US dollars out of the 4.29 spent last year was through marketplaces. That's significant. And going even further, just over 28% of that belongs to the Alibaba group, the largest player in that space. Amazon's just over 11%, and everybody else in the e-commerce space, marketplace, consolidated, is just over 60. So it's, it's significant. And, it does mean more tax fund for us. So let's get into some of that. So tax offices around the world want to ensure that they're efficient in collecting sales tax, VAT, GST, whatever you call it, indirect taxes, and of course, reduce fraud. One of the easiest ways to do that is to make marketplaces liable on behalf of businesses and sellers that sell on these platforms. Effectively, there is a fundamental shift from taxing marketplace sellers that sell on these platforms and moving that obligation to the marketplace and taxing them. Now, specifically, there's a lot of importation dropshipping models going on in distance sales. It really does affect those marketplaces in particular. In the US, it's attributed primarily to the South Dakota versus Wayfair case from 2018. The OECD also released some guidance around how to tax e-commerce and digital services in 2019. A lot of the changes you hear now have recently come in or are coming in principle, are based on these sort of guiding principles. By nature, digital services can enter the markets more easily versus tangible goods. So we saw 5 or so countries initially start to tax digital services. I think by last count, it's just over 80. So with Kenya being the most recent one, I believe. The UK, US, India, Australia, New Zealand, plus others, I've just got some few here, have laws holding marketplaces responsible as facilitators for certain transactions. Now, the UK obviously started off in January. The EU will be coming in shortly with the Econ VAT package in July. I think we'll see a pretty similar trend growing in other countries. As operators like Hataviki are becoming better and better day by day at facilitating transactions, sales, and cross-border trade, it's safe to assume that tax officers will get better at taxing them effectively. It's a lot easier in some ways to hold a few marketplaces accountable rather than millions of sellers accountable, right? So, yeah, pretty interesting. And it removes, I'm sure, I don't know, Ben, what your thoughts are, but I think it removes the red tape around some of the, that to facilitate cross-border trade. That's historically been there. It's easier for an SMB seller or a small mom and pop shop to be able to sell, an import.
Yeah, for sure. About the red tape, you mean it's become easier due to marketplaces? Yeah, definitely. And these changes, I have to say, I'm mostly familiar with the top two and how that is impacting our professional sellers. And one of the advantages on the long term that we see is that the cross-border change is going to be made easier. But then again, changes in itself are painful. So although in a vacuum, the two situations before and after might be better, the change is still painful for some of our users.
Yeah, no, for sure. No, totally agreed. Well, so what I'll do, I've got a interesting piece here on, what is a marketplace, right? By definition, this is quite an interesting one. I know you said your focus is UK and EU, which is primarily goods. From a tax perspective, that a marketplace is often held responsible for. But interestingly enough, if you look at the US, it covers a lot of digital service facilitations and other countries as well. And the term marketplace has to go beyond tangible goods as well. Certainly from a tax perspective, if you facilitate effectively, the key question to ask is, am I facilitating? And if you're facilitating, certain places, for example, like the US, will hold you, again, depending on the state, it's very complex in the US, will hold you accountable for some of those transactions. And the most common sort of questions, we tend to see coming into the Avalara world, are EU and UK and Brexit and the rest of it, is businesses operating or wanting to operate in the US given the size of the market there. So pretty much all states, plus DC, et cetera, have facilitation laws. I think Kansas is going live with theirs on July 1st, so similar timing to the EU, or exact timing to the EU. But, these laws have been around for a while, so I won't dig in too much. And I think the focus of the audience today is primarily on EU, so I'll jump to that. Now, let me walk you through what's really driving the European authorities. And again, these are pre-Brexit, so UK as well. This is what we call the VAT gap in the tax world. It's the difference between what's the expected revenue is from the European Commission versus what is actually collected. So in 2018, the gap was 140 billion with a B euros due to fraud and various reasons. In 2020, because of COVID, that's moved up to 164 billion. That's the forecast. So that's a huge amount of missing tax that the Commission expects. So an easy way to plug that, of course, is to introduce laws that hold marketplaces accountable and online sellers accountable, because primarily a large chunk of this can be plugged by doing those things, especially as e-commerce grows. So EU is introducing the VAT package. The first piece of the VAT package that's extremely important is that EU wants to make the VAT compliance piece simpler for sellers in Europe. So, and for sellers from the rest of the world, frankly. So today's rule can require, sellers that are selling their stock in Europe to separately VAT register in each EU member state. That's cumbersome, it's expensive, and limits the efficiency of the use of the single market, right? That's the entire point. So it's really limited. So, the EU's gone, look, we're going to introduce this. It's going to be a single EU VAT return from the 1st of July. It's called the one-stop shop, or OS. A version of it, MOS, mini one-stop shop, already exists for digital services. So this will enable EU or non-EU sellers to report sales of goods for stock that's already held in the EU in all EU 27 member states with just one registration and filing. An EU-wide €10,000 threshold will be in place. So rather than country-specific distance selling thresholds that are in place, it's just going to be one singular threshold for the whole of the European Union, and the distance selling thresholds will be removed. The second big change is how the EU charges and collects import VAT on goods being shipped from outside of the EU to consumers inside the EU. So today, pre-July, shipments pass straight through, VAT exempt if they don't exceed the €22 de minimis. Above that, someone has to pay import VAT currently, right? The seller can pay this, or have the carrier collect it, or just leave it to the customer, right? But that's a horrible customer experience. We've all been there. Postman shows up, credit card is stuck in customs, or 2 months later you get a bill. It sucks. It's not a great experience, and it's good that we're going to be moving away from that with the use of IOS. The good news is that the EU is introducing the new report. The import one-stop shop, or IOS, online sellers and marketplaces like Facilitation can use this report should they wish to report all the import VAT charged in the checkout. The seller or the marketplace can nominate just one EU member state for this IOS and make monthly filing to declare what's been collected to the authorities. International companies can use this just like EU states, EU companies as well, but most must appoint, frankly, all must appoint a VAT agent or an intermediary, as what EU calls it, and Avalara can help with this. Now, the last and most interesting piece to me is, marketplaces are being, fortunately, unfortunately, placed on the hook for VAT collections and reporting obligations of, many of these transactions. And the two primary examples where a marketplace is responsible are, firstly, any import of goods being sold to an EU consumer, if not exceeding €150, that threshold in place. It could be German, US, Chinese seller, selling something online, which is then shipped from the EU shopper, has to first effectively sell the good on paper to the facilitating marketplace without VAT, and then the marketplace has to then sell to the consumer with local country-specific VAT applied. And secondly, for non-EU sellers only, so that's sellers from US, UK, China, India, etc. If the goods are already in the EU at the time of the sale, then the marketplace is responsible for what I would call back-to-back VAT sale. The value of the sale is immaterial, so the 150 threshold would not apply. The definitions are pretty interesting as well. So the deemed supplier piece, if you are either controlling the terms and condition of the sale on your site, which most marketplaces, frankly, all should and do, or if you're responsible for ordering and delivering the goods between the sellers and the buyer, or frankly, if you're just authorizing the payment piece, you become the deemed supplier. One interesting group of businesses that this is kind of stung or hit is your normal department stores, so your Galleria or your John Lewis's in the UK, who operate concessions, within their stores for major brands. They do it, they operate the same way on their websites. They offer a broad range of products for their online shoppers. Sometimes this can trigger the deemed supplier obligation because a product is often shipped directly from the brand to the seller, but it's being ordered on a department store website. And it's not just retailers, it could be a major car producer or manufacturer, for example. You could be selling part supplies and it's going B2C, they're also affected. But, again, the good news is they can use OS, marketplaces can use an IOS to report some of this. that's enough, I think, about tax legislation. We'll kind of look at, what marketplace can do and should consider, I think, in my view. So marketplaces scale incredibly fast. We know that, that you can enter a web of compliance issues and obligations. So in my view, the consideration end-to-end should look something like this. If a transaction takes place, in real time, you have an HS code first, right? What type of transaction is it? Is it an import? Is it a return? Are you moving goods around, movement of inventory? Do you do warehousing? All of that has an impact. Is it B2C? Is it B2B? Then extremely important, am I the deemed supplier or the facilitator? Then calculate that appropriately based on the relevant rules, exemptions. Then do I have enough to capture the invoicing piece? What's the relevant article that needs to be on the invoice? Do you need a customs invoice? And finally, of course, record keeping obligations, and also not forgetting, ensuring the reporting is consistent with your business sellers in particular, because they're going to be submitting VAT returns. So there needs to be a reconciliation piece there. That's a lot. Now, again, rather than me, talking about this, I think perhaps we switch over to Ben. As my friend Ben here at Katowiki has kindly offered to do this and walk you through how they're approaching this. Over to you, Ben.
Thanks, Rick. So yeah, as you can see, we've been quite challenged by these upcoming regulation changes. Remember coming out of another compliance project, the KYC project, right into this one. So nice first two projects at Katowiki. But yeah, like I said, although I think at the start of these kind of projects, it feels like a burden. Once you get in the thick of things and you really start to understand what the reasons are for these changes and what the implications are for the user, it does again becomes a challenge, a very nice challenge to make it as delightful as possible for our users. So the goals that I'm presenting here on this slide is for this presentation more. So it's an explanation of how we tackled and are tackling the EU and UK VAT project. So that's relating back to the top two that Rick just shared, how that is impacting Katowiki and how we're handling this. Then while we were researching it, we uncovered some opportunities for Katowiki to improve our services that are kind of related with how we aim to handle the EU and UK VAT project. More on that later. And then the last time, I'm just hoping for the audience to better understand our approach and maybe take away some learnings also. That would be nice. Next slide, please. So here you see an example of based on the auction price, whether or not we're the deemed supplier and what that would mean for the amount of VAT that we need to collect and then hand over to the EU tax authority. Quite a common, I think, miscalculation, just because it's so counterintuitive, is that if something is sold for €100 and the VAT is 21%, I'm taking Dutch VAT here, then probably you need to deduct 21% of the €100, but that's not the case. The sales price on our platform is actually the price including VAT, so it's sort of a 121%. So that's why I added the top one in, where because it's €150 or below, it qualifies. So that's the mid column. And then on the right, you also see that since this item has €60.50 VAT, shipping costs, we also need to collect VAT on that. So the mid column, you see whether it qualifies, yes or no. The right one, you see how much we should collect and then hand over to the tax authority. The bottom one doesn't qualify, so it's the seller who needs to make sure that the VAT is properly handled. Next slide, please. So knowing that these were the requirements, I've been going over it quite high level. There's so many details. But once we found out that this was on our agenda to pick up, we got together, had a brainstorming session, and eventually I kind of summarized our goal or our challenge as we need to determine the right VAT percentage and the qualification, preferably automatically. And I think the automatically part has been our biggest challenge. And with the goal of perceiving tax determination as a tax deduction as a service, that's might be quite a long shot, but that's what we're aiming for. So we got into a discussion whether we should buy or build this, and so we put the pros and cons on the wall, I guess, the digital wall, I guess. And the arguments to buy is that well, tax is very complex. It's not our core business, and we found, especially as a response to COVID, that taxes are subject to change. Germany and Ireland have changed their VAT rates to meet professional sellers. By lowering the VAT rate and make them more able to get through this pandemic. So the taxes are subject to change, and we really don't want to constantly keep internationally keep track of what the VAT changes are.
No, and I can attest for that, Ben. I can attest for that. We have a huge army of people at Avalara that is keeping our content up to date. Particularly as you enter, the North American markets, US, Canada, it becomes incredibly complex to manage. So yeah, I'm with you.
Yeah, I think you mentioned 33,000 tax rates in the US or something.
Correct, and I think it's 13,000 tax jurisdictions. 13,
all right.
33 tax rates, well remembered.
All right, so it's complex. That's definitely the conclusion. Then the arguments to build is that there were deadlines in place. So from 1st of January, we needed to be compliant for UK VAT, which we have been, so that I'm quite pleased with that. And there's the 1st of July deadline that we also need to be compliant from that point on. And build something ourselves it gave us a better sense of control. So we were more confident that we'd be done in time. And while we started researching how we could do it automatically, we also found that even if we would build something, it's not fully redundant even if we'd go on and partner with a tax determination service, because the seller input could act as a fallback for automatic tax determination. So even if it's wrong in the rare case, then the seller could improve that. So our approach was build an MVP first, to ensure that we're done on time, that we're compliant, and then start researching how we could best implement a tax determination service for automatic tax determination. Next slide, please. Yeah, thanks. So I'll go over this quite quickly. It's just a breakdown of our releases in our approach to be compliant. So first we focused on UK VAT. It's first on the agenda. We first needed to check for all the items that qualify what the VAT rate is, to then be able to hand it over to Her Majesty's Revenue and Customs. And right now we're focusing on getting ready for EU VAT. By first making sure that we're also properly handling refunds and cancellations, and then just switching everything that we've built for UK VAT to EU. There's quite a big overlap there. And then what we're now researching is potential third-party tax determination service integration to make this all a lot more automatic and a lot more delightful for our sellers and ourselves. Next slide, please. So now I'd like to run you through the discovery of the option to buy. And we soon discovered that tax determination services typically operate as follows. You get the NHS code, you send it to the tax determination service, and you get a VAT rate in return. So that's how we could determine whether or not, or what VAT rate applies for within a transaction. I'd like to add there that many also provide services where you get back whether you should be the deemed supplier, yes or no, given the price and the buyer country and the seller country. Maybe a relevant step back is HS code. I'm not sure whether the audience knows, but it's an internationally recognized classification system. And for international shipping, this is also a code that needs to be added to custom forms, so it gets through customs more smoothly. An example of this is this wine, for example, where this H6 code is basically the first two is quite a broad class, and then the further you get into the HS code, the more specific the link to that code to the actual item is. So this one is this wine bottle, I should say, not the wine glass. It will probably get a different HS code, but a bottle of white wine would have this this HS code.
Yeah, I definitely prefer a bottle over a glass personally, Ben, if I can, if I can in a session. But yeah, absolutely right, and they're country specific as well.
Maybe this afternoon, nice Friday afternoon drinks, that would be good. So our challenge was to collect HS codes. So basically, we found three options after reviewing a few tax determination services. It's either ask the seller to input the HS code, but from some first research, we found that they don't have this on top of mind. And when they submit an item up for auction, we want them to not be distracted by something that might not be relevant for that point in time. We want to keep the conversion from lot draft to lot submission to lot in auction as high as possible. So that's a trade-off that we're researching. Then the second option is guided manual HS code determination and automatic. And actually the next slides go into detail into those three. So this is what I've just shared. Not too much to be put on top of that. I think they don't have it on top of mind always. Then this is an example of guided determination that could be done by either our sellers during lot submission or by our experts during lot review. It basically does an interpretation of the lot details that we send across, and then if the information that we get, if that is not enough to be conclusive about what the HS code is, then some additional questions come in, and you get into a small dialogue. And after answering the questions with some certainty, you are able to conclude an HS code. But while we're testing it, because we have so many special items, the more eccentric items, it was quite difficult to go through the dialogue and then at the end be comfortable that this is the right HS code. So then we started looking into automatic HS code determination, and that basically works as followed. Given that it's within the same tax determination services, this would be the flow. You send lot info to the tax determination service. They have AI, machine learning tooling to then be able to better estimate the HS code. And if that's not enough, quite regularly, a human would come in and review all the information and then draw the right conclusion about what the HS code is. So once you have that, you are back on track to be able to determine the right taxes for a transaction. So this was all what we found relevant for checking whether a transaction makes us qualified as being the deemed supplier. So we should collect VAT. But we uncovered some opportunities by having the HS codes from the start. And I'd like to go through three in this presentation. And the first is total cost transparency. The example that Rick just gave happens sometimes to our buyers also, where they buy an item and given what they buy from which country, then the courier would show up to the doorstep and deliver that precious item along with the request to pay import VAT and customs. And having the HS codes from the start would allow us to actually be fully transparent about the total costs that are going to be incurred to our buyers. Right now, we do communicate that additional costs could occur, but I think it will be a lot more delightful, there's the word again, a lot more delightful for our buyers in this case to be fully aware that if they make a €250 bid, that the total cost estimate is actually 327, which hopefully will lead to a lot less cancellations. And the second is that we see that if that some sellers don't ship items internationally with HS codes, and then the courier would need to conclude the the HS code from just a 2-line item description. And what we found is that that while they're doing it's quite tough to just do that from 2 lines of text. So if they have multiple HS codes that could qualify, they tend, and I think it's standard and logical approach is just to take the highest VAT rate and customs, so they don't miss out on any tax, and they should. So what we're trying to do here is make it as easy as possible for our sellers to add the HS code to the customs form. That's what we're working towards next. Then there's the third benefit for our sellers, and that is also what Rick touched upon earlier, is that the threshold is going to be removed. So that means that even if you're selling just a few items to countries in a corner of Europe, from wherever you're based from, it's a different corner, but if there are just a few transactions, then it's quite costly to try and check what VAT rate applies for that country. So this could really help them there to be able to determine all the VAT rates, not just when we're the deemed supplier, but also for all their international sales. And I won't go into the, if you want to go through.
This is my favorite slide.
This is how we were triggered and to do this presentation, actually. So what I want to present here is that we've gone through the whole flow that a seller could go through on our platform and concluded, you can see it in the green notes, that all the advantages that this could bring to our sellers. Yeah. If you want to review this, just pause it here, I guess, and go. So we concluded that there are benefits of working together with the tax determination services. So we now needed to find how deep we wanted to get involved, and we concluded that there are 3 methods of integration. And first is the all-out delight. It means that for all the items that are submitted, we have the HS code, so we have full transparency from the start on all the bids that occurred. That does mean that we are asking a lot of information from the tax determination service, and every call comes with a price. So that might not be the best way to go from the start. So we also added Smart Delight, which benefits from a service that doesn't require the human HS code determination, but actually uses a tool that just the AI and the algorithm predicts the total VAT on a certain transaction. So it's not exact, it's more of an approximation than the first one, but it does give the light, and it's probably less costly. And then if a transaction could then still make us be a deemed supplier, then we would check the HS code to know the exact VAT rates. And then the third version is actually not do that at all at the start, but get familiar first with the tax determination service and only check when we have enough evidence that we could be the deemed supplier and be compliant and not have the right VAT rates from the start without having the seller to give us the HS codes. And then I added this as some relevant insights on what we found from the research up till now. I shared it previously also, but for the guided determination service, we found that our eccentric objects are quite tough to confidently conclude the HS codes. And for another vendor, if there is a human involved, depending on what you put in the SLA, it is a 2 to 24 hour gap to sharing the information and getting the HS code back. So we've looked into our gap from lot approved to lot in auction, and based on that, we'll check what works for us. And what we're doing next is actually concluding whether there are other forms of guided determination services that might work a bit better, and check other automatic tax determination services also, and see what is the best fit for us at Katowice. So the next step is, which is what we're now researching and checking internally. So if a colleague sees this and thinks, oh, it's already set in stone, it's not. We're still discussing this, but this is something that's on my mind right now, is that we allow pro sellers to input HS code at lot submission optionally. So we get a better grasp. What's the word here, Rick? You're better at this.
A better grip on the situation?
Yeah, I guess that's it. Let's go with that. We get a better understanding of the knowledge of HS code with our seller base. And then we can check this HS code with the tax determination service, get the VAT rate back, and then the seller will get that relief in administrational effort. And we have a bit of we built some experience, so we know better at the end what will work best in our cooperation with the tax determination service.
Absolutely. Well, the good news is, in some ways, and hopefully, that Avalara is able to help with a lot of this, and we have a suite of item classification, tax determination, compliance, reporting, fiscal rep, e-invoicing. I mean, there's so much Avalara does. We have various solutions and services offered globally. So no matter how complex a compliance piece or a tax technology requirement may be, somewhere within our organization, we have the best in class technology and teams to solve them. We have very specific teams, particularly built around marketplaces at the time, at the moment, given all the changes that are happening. So effectively, we're widely used by marketplaces, marketplace sellers. The largest marketplaces in e-commerce, I think it's in the public domain, trust Avalara to deliver for them at scale, and to ensure that both the marketplace and sellers are fully compliant in tandem.
Great stuff, Rick. Thanks for your insights on your learnings, both of you, Rick and Ben. Ben, I got a couple of questions for start with you. How did you cope with the late December conclusion on the VAT marketplace changes that come into effect on January 1st? Does that question make sense?
Yeah, sure. Let me take a step back and go into the time machine. So it was indeed late December. We had on our roadmap that we needed to be compliant with UK VAT from January 1st, and there were a lot of unknowns still. So we got together and first gathered all the information we needed to ensure compliance first, and look at the implications of EU and UK VAT, see how those compare. And we decided to go for compliance first, and being able to actually collect the VAT second. So we've been kind of paying VAT out of our own pockets just to be compliant. And that's basically has been our approach.
Okay. Another question about lessons learned. What's the main lesson learned from getting CataWiki ready for the legal challenges? That's a very broad question. Maybe you want to break that down.
Yes, so we first tried to get into a discovery phase, understand exactly what the project's about. We then soon uncovered, like I said in the presentation, that we really wanted to get that automated VAT determination. And I think that the biggest lesson learned and the finding is that we now know we really need to connect our items to the HS codes to enable and provide more solutions like the transparency for all for the pricing when bidding. But the biggest lesson there is that if you reserve time to really discover and not only stay on the surface, that you can uncover great things that might not be predictable at first, and that can help the company even broader than just being compliant.
Okay. Right, Rick, get ready. You got some questions firing up here, so I'm going to try and distill them down. Okay, let's go with one, maybe more binary ones. Why are HS codes country specific?
It's effectively to ensure any local businesses that need to be protected, or local properties or exports that need to be protected in a particular country are protected. So if, for example, you want to protect, art being sold in Italy because Italy is so specific for art, you put a HS code in that means that importing art into Italy is going to cost you more than buying locally. Okay.
Makes sense. And you've got some HS code lookup and a service, right, that you have to help any questions that the audience may have around this, right?
Yes, we do. Yeah, absolutely. We've got an automated service, and we also have a huge team behind it as well.
Okay. Right, One Stop. Obviously, that's coming up. When will One Stop changes come into effect?
It's the 1st of July, or the Ecom VAT package is coming in law, and One Stop Shop is a part of that.
Related question: how do I know if One Stop is right for my business?
That's a great one. You may do or you may not. It's obviously worth checking out the nuances of how your business is set up, but One Stop Shop is a simplification. So in theory, given that it's a simplification, it should be appropriate for your business as long as your business model is appropriate for One Stop Shop.
Little crystal ball question here. Are EU VAT laws likely to change again after 2020? I think that question is, I guess, are there any upcoming or pending changes that the audience should be aware of, I think is probably the question.
Okay, so the EU, so the e-commerce VAT package is part of the broader tax reform package in the European Union, and that's a multi-year program. So there are definitely going to be more simplifications and changes coming. The next major one's planned 2022, and then 2023 is when the tax action package is completely in place. And of course, there may be something after that as well. But there are very specific. It's a very specific roadmap with that the European Commission has put in place with lots of different touch points. And I'd happily share any information about that if somebody's interested after, if you want to geek out on some of that stuff.
Okay, cool. Next question, how do you know if an item is eligible for the import one-stop shop besides the €150 limit? Does that question make sense?
How do you know if an item is specific?
Yeah, eligible for the import one-stop shop besides the 150 limit?
Well, simply if it's being imported. So if it's being imported and there's obviously it's a bit below threshold, you can use the IOS regime to to declare that, and then the interesting thing from a marketplace perspective, of course, is the marketplace can also use the IOS, not just marketplace merchants. It's maybe appropriate for both, but yeah, somewhat makes sense, that question. Not
okay.
fully.
Next one is around drop shipping. You may not be onto this, but I'm going to ask anyway because it's a good debate. Does this year's tax changes effectively mean the end of drop shipping?
Not as a concept, I would say. From a tax perspective, it definitely means that it's more, use my words,
challenging, right?
Challenging, could be punitive if you've been doing it historically without reviewing VAT implications.
I think what we've seen is that sometimes people are looking for other drop shippers or different locations that are maybe closer to the consumer in those countries, right? So they can sidestep that issue. That's some of the things that we see.
Yeah.
Last question. I think we've got 1 more minute. So next question: does Avalara have a long integration period? I think maybe Rick, you can take that one. I think that's about onboarding for Avalara. Does that question make sense?
Yeah, absolutely. So so it depends on the product and the suite of services. Obviously, Avalara has a huge suite of services that it offers globally. I'm going to make a broad assumption that question is about AvaTax, which is our flagship product, which is our tax determination product. We have lots of pre-built connectors which can simplify onboarding processes and can shorten them. Or if it's a very super complex setup, it could be a little bit longer than using a connector that's pre-built. It's all case by case, unfortunately. I've seen as short as a few days all the way up to a couple of months to deploy properly, depending on the complexity of the business we set up for.
Okay, good stuff. Listen, both of you, thanks for your time today. Thanks for your insights and your perspective. Great sweatshirt as well, Ben. I know that's something we talked about. Unfortunately, that's not for sale right now for those of you that can see it. So thanks for joining, both of you. One last quick reminder for the audience. So we're back on at 1:30 with the eDesk team and Google. One of the reminders from the team is please don't forget to download contents of your delegate bag, both PDFs and contact data before leaving the platform at the end of today. So with that, I'll let you jump and have some lunch, and we look forward to welcoming you back at 1:30.